how do you keep track of individual stock and ETF ideas with all of the information we have available to us as modern day investors? Hey guys, I'm Dave Keller, founder of Market Misbehavior and president and chief strategist of Sierra Alpha Research. Excited to share with you today's show here on StockCharts TV, where we will talk about one of the tools I use primarily to look for individual stock ideas and really understand the landscape in the equity markets. I feel like a lot of times we're very focused on the high-level indexes, the S&P, the NASDAQ, the Dow, the Russell. And to be honest with you, I think one of the big challenges for individual investors is to connect those high-level understandings, high-level analysis of the market environment with granular ideas, with specific stocks that may present actionable opportunities. The tool we're going to talk about today is called the MarketCarpet. It's one of my favorite features of StockCharts.com. Now, before we get there, let's look at a chart of the S&P 500 here and kick off our thought process by just reflecting on where the markets are at now and going toward the later stages of October. What's so interesting is October is actually one of the weaker months of the year if you look seasonally. September, October actually tend to be relatively weak. If you look at 2024, it's been kind of anything but. August finished near the highs of the month. September finished near the highs of the month. October, we'll see, because we still have about a week and a half left here in the month, but overall continuing to show quite a bit of strength here. And the way we define strength, it can be very different for each of us, but for me, it comes back to Charles Dow's foundational work on analyzing price trends. And very simply, are the highs getting higher? Are the lows getting higher? Or the opposite? Do we have lower lows and lower highs? And just by taking a step back from the chart, making that basic assessment, we can do that. So the way I'm seeing the S&P, and to be honest with you, I have a lot of lines on my daily S&P chart. I feel like the VIX and the number of lines I have on my chart are often very closely related. There's a high correlation because the more volatile, the more uncertain the market, the more I'm trying to draw lines just to quantify what I'm seeing and really focus in and key in on a particular level. So for what it's worth, I'm drawing a lot of lines here recently. But for me, the daily chart of the S&P is the beginning of my process every day. I look at a weekly chart and then the daily chart of the S&P first thing every morning. This is the one that I use. And I use lines like this as, to really represent an ongoing conversation I'm having with the markets. And that's what I think of this daily S&P chart as representing. So what have we seen recently? We've been talking about kind of this wedge-shaped pattern, right? With the higher lows from August, September, and now in October, we've put in most recently a higher low around 56.70, we'll call it, before the rally that we've experienced through most of the month of October. I had drawn this blue trend line tracking the lows from August and September. So for a while, it sort of looked like that was a really good trend line to track the general pace of this advance. And overall, I still think it's a pretty decent way to do it. But what's happened is, in the last sort of month or so, you can see that the trend is actually moving away from the trend line. That's because the pace of the advance is increasing. And that's actually a really cool point to make about the way that we visualize our charts using the y-axis. Here I'm using what's called a semi-log scale, or what's called a log chart. Below your charts on stock charts, you can set that setting down here. And I would encourage you 99% of the time, log scale is probably the right answer. And the reason is because that treats the vertical axis in equal percentage terms. A normal arithmetic scale, like if you just have a normal scale of prices, dollar amounts have an equal treatment, which means the difference between $10 and $11 is the same as $1,000 and $1,001. And obviously that is a very different percentage move, so it doesn't make a lot of sense. So a log scale means 1% has an equal treatment. And what that means when you draw a trend line is this trend line represents a consistent percentage advance over a period of time, right? That might be a line that tracks about a 2% monthly gain or something like that. And I don't care as much what the actual percentage is. I care that the trend line with a certain slope represents a certain pace of appreciation in the stock price over a period of time. And what that means when the price starts to get away from that trend line is it means that the pace is advancing. And that's what we've experienced here, I think, from August and September into October. Is all of a sudden the pace of this advance is starting to heat up a little bit. So I drew a secondary trend line using that September low, and the early October low kind of lines up with where we're testing here on Monday the 21st, kind of trading right around that new trend line support. For me, I mean, I still see this as a primary uptrend. My market trend model, which is the first chart I look at every morning, bullish on all three time frames. So overall, I'd say the structure of the market still remains quite sound. So with that in mind, we have a position of strength, and certainly the last couple months have been strong coming off of that early August low, and October so far has been pretty strong as well. Today we're sort of in a choppy day, and I will tell you one of the tabs I have open pretty much all day is this tab right here, which is called the Market Carpet. You can get to the Market Carpet from the main StockCharts website. I have the Market Carpet maximized, which is where I tend to keep it. But if you click on Charts and Tools, you can find the Market Carpet listed out there. What I love about this sort of heat map visualization is it allows you to look at a lot of information in one page, right? It's sort of a dashboard as an equity investor. And I would argue it allows you to do three very important things. This really gets to how I use this visualization. Number one, helps you understand the entire landscape. At a glance, what's happening, depending on your time frame and how you have the heat map set up, gives you kind of an initial look like, what are we working with? What's the menu here? Number two, you look at the big names, right? The larger names that have pretty big influence. We focus on the Magnificent Seven, some of those other leading names that really dominate our benchmarks in 2024. Finally, I look for outliers. I look for smaller opportunities that may be a little bit under the radar, but because of the heat map, it surfaces those big movers very, very quickly. I'm going to orient you to this page a little bit further, and then we'll go through a quick analysis just using the daily moves. This is using a one-day percent change just as a starting point that'll share with you some of the takeaways using some other configurations to this heat map, and hopefully give you some ideas about how to use this in your own process. So I would say to start with, right, each box represents one stock. I'm using the S&P 500, but obviously you can go to a different group, and this is really helpful if you're looking at a particular sector. You can drill in and look at one sector. You can look at a broader asset allocation list, different indexes, whatever you want. Most of the time, to be honest with you, I start with the S&P 500 because it's a good sort of working list of very liquid, big U.S. names that I usually find plenty of opportunities as a starting point. So that's kind of how I would go with it. We're looking at performance, but you'll notice there are a number of different indicators we can look at, and later I'll show you a couple of those other settings that I actually like to use. We can change the time frame, and I often start with 1 day. I'll often look at like a 1 month or a 1 week when I'm doing my weekly flight plan for my premium members. I look at the 5-day change just to think about what's happened over the last 5 trading days. Year to date, at a time like October, is sort of good to capture some of those larger themes and what's kind of happening. I never change the size. The size is represented by the market cap because the bigger names have a bigger box, and that's kind of the way that I want to do it. And you'll notice I'm using the vanilla color scheme, which means up a lot is in bright green, down a lot is in bright red, and neutral is kind of this neutral beige color. That color scheme for me helps me figure out the changes. The default is more like this red to green. I don't like this one as much, but some people do, and I would encourage you to experiment with this. The right answer, honestly, is whatever's going to help you answer questions most effectively. I've done a lot of testing with the different color schemes, and I've tried like a random day. I'll use a different scheme just to see what jumps out. This scheme for me works, and that's why I use it. But the right answer is whatever works for you. So don't take what I'm sharing with you as gospel. Make sure that you go through some of these different settings and use the right configuration that's going to help you answer the questions you're trying to answer as an investor. So my process with this, and we'll use the 1 day percent change just as an example, and this is obviously Monday the 21st. We're doing this kind of midday. I'm on Pacific time. This is around 2 p.m. Eastern. We're looking at the current market environment. So step one, big picture, right? Look at this entire quilt of 500 little spots. What's your general takeaway? I would say at this point, kind of neutral to down, right? I'm seeing a lot of neutral. That's kind of the primary color that I'm noticing is something kind of around a neutral beige. I'm seeing quite a bit of red. So I'm assuming, without even looking at the chart of the S&P, that this is probably a flat to down day for the benchmarks at this particular point. I'm seeing a number of stocks that are actually down quite a bit, which we'll get to in a little bit. But overall, I would say this is probably a neutral to slightly down day in the markets. I don't see a lot of bright green represented. Step two, look at the big names, right? Sort of the significant names out there. And I would say at this point, I'm noticing NVIDIA up about 3% today, but you can see most of the other Magnificent Seven names are actually doing okay. Alphabet up about 0.5%. Apple up 0.7%, Microsoft, Broadcom, Amazon, Meta slightly lower. Not a lot of the Magnificent Seven names down a lot, which is one of the reasons why I would say even though there's a lot of kind of neutral red, there's also some kind of more tinted green names, particularly in the largest boxes. And this, by the way, one of the brilliant ways to think about it is it's not perfect, because if you actually did it by pure market cap, in names like Nvidia, Apple, Microsoft, Alphabet, Meta, they would take up like the whole screen, right? Because there's such a big weight, and some of the smaller names would have a tiny, minuscule box you wouldn't be even able to see on this scale. So you do have it kind of graded on a curve a little bit. So the biggest names are not truly as big as their market cap represents, and the smaller names are not as small as their market cap represent, but it does give you a good sense of the relative weight. So the reason why we focus on some of the larger names and what they're doing is because they dominate, right? So if you just look at like these 10 largest boxes, and this is by sector, technology, communication services, and consumer discretionary, you can see that the biggest names have a very significant weight compared to some of the smaller names you'll see in like financials or consumer discretionary or like industrials, right? These are just not particularly heavy weights, and as a result, you really want to have a good perspective on the largest names and what they're telling us. So for now, at least, I would say the strength in some of those Magnificent Seven names probably means, even though a lot of other stocks are down, the benchmarks are probably okay today, given the fact that the biggest names are actually slightly or quite a bit in the green, in the case of Nvidia, pushing to new all-time highs yet again. So that's the second way I use it. Look at what I call the big dogs. What are the biggest names telling us about the current environment? The third piece, which is also pretty valuable, is looking at some of the smaller names, right? And just looking at opportunities, what I call like more of an opportunistic analysis. Now that I understand the big picture and understand the landscape, now that I start to look at the larger names and what's happening, let me start to look at smaller things. Do I see clusters of green or red, which would tell me it's more of an industry move, or an entire sector is working or not working? Are there any outliers where like a lot of a sector is red, but there's one green box? And maybe that will help me get an idea on an actionable idea within a sector, right? A company-specific move that is not about the sector doing well or poorly, but it's more about the general strength there. When I start to think of it this way, I would say on this particular day, note that a lot of the sectors are actually quite mixed, particularly the three large growth sectors, the FANG sectors of technology, communication services, and consumer discretionary. I see some bright green like Nvidia, here like advanced auto parts. And by the way, you can notice when you mouse over one of the boxes, you get a little preview chart giving you the quick, specific data point that is driving the color of the box, but also gives you the little preview chart. And I love that way of just quickly visualizing. And by the way, if you click on it, it'll go to the symbol summary page, so you can drill into a lot more detail on that particular stock. So I'm seeing even within technology, there's things that are up quite a bit, but there's things like SolarEdge, some of the solar names, Enphase in that same group, renewable energy, actually down a little bit. Here's HP Enterprise actually rolling over after a pretty good rally to test resistance. Within consumer discretionary, names like VF Corp, Bath and Body Works, SCP Pool are all rolling over today. So, thinking about those little opportunities as well. I would also notice on this particular day that defensive sectors don't look particularly well. Your three kind of most defensive sectors could be consumer staples, utilities, and real estate, and especially REITs. They're pretty much all red, varying degrees of a little bit red to a lot red. And so this is a defensive sector. At times, over the last 3 to 4 months has actually improved quite a bit. Today, I would assume real estate is probably one of the worst performing S&P sectors, just based on the amount of red and the lack of green that I see in that particular area. The other thing I would say is when you think about what you're seeing on the heat map versus some of the larger themes that you know, one of the themes of 2024 has been the underperformance of energy, right? As crude oil prices have remained relatively weak, you're seeing the energy sector as a chronic underperformer. Right? Really, for the last couple of years, energy has not been a particularly strong place to be, with some limited examples of where it's outperformed. But generally speaking, energy has not been a great relative bet. And so, noticing when energy starts to pop up in the green, right? Remembering what you know about the trends over time, And then this is sort of that incremental data. This is giving you new data based on today's session. Is anything different than sort of those larger themes that you've been observing? So if energy starts to work, when you look at the market carpet every day, you'll start to see some green pop up there. That could be one of those things that tells you, okay, hold on, energy's not been great, but it's looking greener than some of the other areas. Maybe I want to look at the charts in a little more detail and see if they can give me some ideas. So those are the three ways that I use the heat map, and kind of a quick run through what I'm seeing today, sort of that afternoon on Monday, October 21st. And again, as a review, and this is how I would encourage you to use a visualization like this. Number one, high level, what is your impression of the overall, entire landscape, right? Are you seeing more green than red? Does it feel like a positive or negative day? Does it feel homogeneous, meaning everything's kind of doing the same? Or is it more heterogeneous, meaning there's some things that are working and some things that are not? I would argue on a day like today, it's kind of modeled, right? Some green, some red, a lot of neutral. Second thing would be focusing on the largest names. These are the names that have an outsized influence on our benchmarks. You can see even within particular sectors, certain names will have big weights, like Walmart and consumer staples, Exxon and Chevron and energy, or like Eli Lilly and United Healthcare in the healthcare sector. So what are those largest names, especially if you're looking at the S&P, the Magnificent Seven, those big growth stocks? What are they doing? And because that most likely is going to dominate the force that is causing the S&P or the NASDAQ to move higher or lower. And then finally, looking for opportunities, looking for outliers, looking for bright green and bright red, really thinking about where those opportunities might be. And I would never ever make an investment decision based purely on what I'm seeing on the market carpet. This gives me the evidence that I need to figure out where I need to dig a little deeper. From here, I would start looking at the charts representing some of those boxes that I think tell me a story, and analyze trends, use all the great tools on StockCharts to really analyze their performance over time. So that's how I use the market carpet. I want to go through a couple other things that I use and things that I think will help you make sense of the markets here in October 2024, looking at some different time frames, also different data. Right now I'm just looking at percent changes. We can also look at a couple indicators, which I think are pretty helpful. Before I do that, I did want to give you a couple quick announcements. First off, if you're looking for my daily market recap show, it is alive and well. I'm actually hosting it on my YouTube channel called Market Misbehavior with Dave Keller, CMT. My new show is called Chart This with Dave Keller. It's live streamed on YouTube, also on X, on Facebook, and on LinkedIn every weekday after the close, 4 p.m. Eastern, 1 p.m. Pacific. I do have a mailbag going with that new show. We've been doing mailbag episodes on Friday. Had a lot of great interactions with our viewers, and I would love to add you to the list of viewers. You can go to my YouTube channel called Market Misbehavior, or just follow me on all the social platforms. Look for an announcement. Make sure you have those alerts turned on, and you'll be able to join me on the live stream. Ask questions as we go every trading day. Also, if the stuff that I'm showing you on the show sounds interesting, and if you want to learn more, my passion and my mission with Market Misbehavior is to empower individual investors and financial advisors to upgrade their market awareness, to improve their decision making, and to just better apply the lessons of technical analysis and what I call behavioral investing. If that's of interest, go to my website called marketmisbehavior.com. You'll see a link to capture a free course or to participate in a free course. And that is a free 5-week email course on behavioral investing, just to get you started, just to get you thinking about how you think about the markets and how you think about your portfolios. I hope you will come out of that free course a changed investor in some small way, and hopefully it will give you an idea of how we can maybe work together going forward. So go to marketmisbehavior.com, or just scan the QR code that you see on your screen, and you can go to the free course on my website. All right, so we've talked about the sort of 1 day percent change, but that is just scratching the surface about how I think a visualization like this can really help you understand what's happening in the markets. Here are a couple of things that I do. Every week, I actually do a 5-day view, and I do this over the weekend. Part of my premium offering from my Market Misbehavior premium members, which you should check out if you're interested, is at the end of every week. Over the weekend, I do the 5-day percent change, talk about some of the themes. This is a great thing to do over the weekend to really think about some of the larger term themes and what they've done. Today, though, I'm going to do a 1 month visualization. So everything is the same, right? The size is represented by the market cap, or the market cap is represented by the size of the box. The colors, though, instead of the 1 day change, are showing you the 1 month change. And the reason why I want to do that is because going back to the chart of the S&P, it's been a pretty strong month, right? From mid-September to mid-October, we've gone on gone up a couple hundred points from 5650-ish to 5850-ish. So overall, the market's up about 200 points for the S&P. What have some of the individual names in the S&P done? And again, don't do anything different. Go back to those 3 steps that we talked about. So number 1, look at the overall landscape. What's your impression? Now, compared to what we saw today, which was kind of a mixed day and I would say more neutral than anything, here we actually see quite a bit more differentiation, right? So you can see things that were up quite a bit, like NVIDIA up about 22.5%, Netflix and T-Mobile up about 10, 12%. So you're seeing quite a bit of strength in some individual names. I would also say sectors like financial strike me as having a particularly strong 4-week period. Materials, industrials having quite a bit of strength here. Not a lot of red. The average color kind of in the green. Look at how healthcare, particularly not great over the last month. So I would say number 1 at a high level, quite a bit of differentiation. Some things up quite a bit more, down quite a bit more over when we broaden out the time frame to about a month, even with the S&P up during that period. The second thing, look at the big dogs, the larger names. I mentioned NVIDIA up quite a bit. Notice how Microsoft, Amazon, Tesla actually down for the last month. So over the last month, if you own Microsoft, Amazon, or Tesla, not only are you underperforming, you're down in absolute terms, and I think that hurts quite a bit. So the Magnificent Seven over the last 1 month, there's quite a performance spread from NVIDIA up 22.6% to Tesla down 8.8% just over the last 4 weeks. Finally, look at some individual ideas. And because the market was up and because the average sector kind of did okay, I like to focus in on things that did not do well. And I'm immediately drawn to some of the semiconductors like KLIC, which is down 11% in the last month. The renewable energy sector or group continuing to show weakness. Here's SolarEdge down 19% for the last month. Enphase down 22%. You can see from that little preview chart, this is a group that's actually broken down recently. Within healthcare, you can really focus in on Merck, Regeneron. These are a number of Molina Healthcare and Managed Care Dame down about 18%. So we can focus on some of those individual stocks that are really dragging some of these sectors down or really defining themselves by their inability to outperform or participate in the uptrend. So those are some observations I would make on the 1 month visualization, and also Netflix and T-Mobile looking pretty decent there just on that basic analysis. All right. The last thing I will leave you with, and then we'll wrap the show here, is don't forget that you can use other indicators. And I'll show you 2 that I like to use. I switched to RSI. Now, if you do that, remember, I'm still doing the 1 month change in the RSI, which is not something I look at a ton. So I would switch this setting where it says color by the latest value, because I just want to show the RSI values. Now, what this does is the things that are kind of getting to the overbought range, like Cisco, which has moved up a lot recently, the brighter green means the higher RSI. So the brightest greens are going to be up, things up in the 80-90% RSI range. The redder colors are going to be things down in sort of the 20-30 or so RSI ranges. So things that are kind of getting to that oversold territory. So I can quickly start to focus in on particular sectors, which are the names that are the most overbought, which are the names that are most oversold. And depending on my approach, I tend to be a little more growth oriented, finding some of the stronger opportunities. Just using an indicator like RSI, I find to be pretty valuable. The last thing I will tell you, or the last example, would be the scooter rankings. Scooter rankings are a proprietary technical ranking created by StockCharts years ago. I think it's a very effective kind of starting point for taking a list of stocks or ETFs and just thinking about the relative strengths or the relative opportunities, because it's a percentile ranking. And so here I'm looking at the S&P 500. These are mostly going to be the large cap scooter rankings that are being used. And literally the higher the scooter ranking, the larger or the brighter the green, the lower the scooter ranking, the brighter the red. So again, focus on one particular sector, and you can immediately see within healthcare, HCA with a scooter ranking around 83, ISRG Intuitive Surgical just breaking out this week with a ranking above 90%. I can also see Universal Health Systems, Insulet, which is PODD, both with rankings in the top kind of decile or so. So the scooter rankings, I think, is the final way I would use this. And this is where you can see energy obviously pretty rough on a relative basis because their scooter rankings on average are pretty low, which means that generally speaking, using the multiple time frame structure of the StockCharts technical ranking, there's just not as good of an opportunity as you can see in other areas of the market. That, folks, is how I use the market carpet functionality within StockCharts to really make some basic assessments with any group of securities, but I especially like to use it for the S&P 500. I think there's so much you can gain by having this visualization in your toolkit on a random trading day just to make a quick assessment. And again, remember the 3 steps that we talked about: the top level, the big dogs, and then the granular sort of opportunities. What do you think? What tools do you use to make sense of the markets, and how to use the market carpet in a way I didn't show? Make sure you drop a comment below and let me know. For Sierra Alpha Research and Market Misbehavior, I'm Dave Keller. Thanks for joining me here on StockCharts TV, and have a great day.